Time now to get to the final trade of the day with Alan Eckman of Agora Financial, who's keeping tabs on the wild market action from the wilds of Upper Michigan. Hello, Alan. We are looking forward to hearing your trader talk this week.
Hello, Angie. I'm up at the Lake Lodge, but I did see a bounce from the bottom yesterday. Hopefully that's just the beginning. But let's talk time. Every time in history so far, when the market sold off, it's bounced back and made new higher highs. And more importantly, time is what we have with our options.
What's the latest on some of your trades to date?
Current positions. AMD is an August option, so that has about a week and a half, but we did sell into strength and sold half the position with a 50% profit. Let's see what happens in the next week and a half. But the other positions are September Oracle play, September JD.com play, and an October Hewlett-Packard. So we've got a lot of time. Now let's focus on the macro market, not the individual stocks. If you can see the S&P get back above 29.25, that's the halfway point of that drop from the top. And if it gets above that point, then it typically will make another rally and score some new highs.
I noticed in this week's WPI Trade Trigger, you have a retweet.
Smart money says, and we've said it many times, Twitter. Now, we made 50% and 100% just here in July on our positions in Twitter here. Now, this is a stock that had a breakout above 40. Now, it's come back to the breakout as markets often do. So we've seen winners here. If you remember last year, 235%, 164%. So this is a stock that smart money has been smart about playing and making money. So the position we're looking at here is a September call, the September 37 call in Twitter. Gives us some time, gives us more than a month. We're looking at a month and a half. And again, it's all about the smart money making an extended move after coming back to this $40 super support to lean on. Let's see if we can make another rally to the upside.
Alan, we're used to hearing about the Fed put. This week in your trading floor takeaways, you are starting with a presidential put. Explain that one.
Now, let's remember, the president is a salesman, and his success is dependent on the stock market. He is going to do everything and anything in his power to build the stock market back up. Now, these were self-inflicted wounds. These can be self-corrected. So let's see what happens in the next couple weeks. Number 2, 5 fall. Tech market has fallen 10% or more 5 separate times here in the last couple of years. And each and every time it's bounced back and made new all-time highs. So let's look for tech to lead the way once again. It has to go down so they can go back up. And number 3, the rate reality. Now, the market had it right. We got a 0.25% rate cut here recently. Now, we look up to September. The markets are telling us there's a 100%, not anything in life is 100%, but there's a 100% chance of a September cut in rates. And there's also an 80% chance of cut in December. So it looks like because of this pullback, the markets are forced to cut rates. That's a positive for stocks. So remember, only 2 weeks ago, we were at all-time forever highs. Success in our strategy is more important than anything using this right strategy on the right stock, and it's done very well. So we will say no more. We'll look for the market to do what it's done every time in history.
Thank you, Alan. Safe travels back to the trading floor.
Thank you.
For more Business First AM, check us out on social media. We're on Facebook, YouTube, and Twitter. And go to businessfirstam.com for where to see our show on TV.